Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for the 1st of April. It is a Monday. The market likes Mondays. At least it liked this Monday. A lot of buying in the market, kind of following through the movement that we saw on Friday of last week. Hope everybody had a fantastic weekend and a great Monday, both in and out of the market. Good to see you guys, as always. On the earnings front, pretty light all week long. We do have Lamb Weston and WBA S&P 500 companies reporting tomorrow before the open. So we will keep an eye on that, but it is a very light week on the earnings front. Of course, we're not too far away. Now we're in April. When we get to April, we have to start thinking about those upcoming earnings. They're going to kick off here in about a week and a half or so. 2 weeks from now, we're going to be getting some earnings and probably a fair amount of them. So do be sure to be checking those earnings calendars for any of your existing trades, any trades that you look to make, just so you can make sure that you are aware of those announcements and can handle them, whatever your personal rules dictate. So take a look at the heat map here. I mean, pretty much green across the board. We did see more selling over in the utility sector, a little bit in the REITs as well. A little back and forth in consumer goods, and a lot of back and forth over in healthcare as that area continues to be very, very back and forthy. So for lack of a better word to describe that, we'll take a look at it as we get there. Here we are on the S&P 500. And hi, Patricia. Great to see you. As always, I hope you had a great weekend. Hey, Micah. Good to see you, my friend. We had a nice gap to get the day going. And we just kind of went with it. We saw that movement after really spending last week up until Friday in that little range, trying to figure out what we wanted to do with our life in the S&P 500. We finally got that movement on Friday and really good follow through here today, basically from top to bottom, closing near the highs of the day. And maybe more importantly, closing right at that resistance level. This previous swing high, of course, we know that it was a little bit of old resistance back through here. Have to zoom way back now. We do have a little bit of resistance back here, some support, our most recent swing high, where, of course, we did see some profit taking. This should be a bit of a fight. We do have a lot of momentum on our side right now, no doubt about it. I do think it's always a good idea to respect resistance, as far as, trading is concerned. If we can push through this level of resistance, really not a lot until we get into that 29 to 29.20 range on the S&P 500. Would love to see it push through that here tomorrow. We'll see if that's what we're going to get or not. Beyond that, I do feel, at least for myself, very confident in looking at the swing low that we did establish last week. We talked a little bit about it as the week went on last week, as our new swing low, as that new line in the sand. If we pull back, that will be where it shouldn't go below, in my opinion. Below that would be a little bit of a sell signal. Obviously, we're a ways away from that. Don't have to worry about that, even potentially for the short term. But I like the way we've seen that upward movement off of that low. Yeah, it took a while to get going, but it got going, and that's the important part, right? So do keep an eye on this 28.60 to 70 range. It's really hard to give this, in my opinion, a number. Resistance is 28.70. I think it's about 28.70 on the S&P. Little bit of room if we can push through that. We do have some room to go. Over on the NASDAQ, of course, they were already kind of a little bit ahead of schedule as far as breaking resistance goes, working close to that 7,500, which was a swing resistance, not a huge historical price point, but we did see selling off of 75 before. So again, we are going to be challenging that resistance level. It looks like early in the week, much like the S&P 500. So it could be a really interesting week. If we can win these fights, that could be some really good signals for the bulls. I'm not as concerned. If I had to bet on which was easier to break, I would bet on the swing high versus the little extra history we have on the S&P 500. Not quite there just yet, but a really good solid day for tech as it continues to perform. It does continue to be one of my favorite areas in the market. Nothing really changed there. What did kind of change over the last couple of trading days is the Dow Jones. We've watched for weeks now. We saw a really nice movement in the S&P and the NASDAQ both, not really seeing the Dow Jones get involved. But that really started to change on Friday and definitely changed here today. This is probably the biggest battle, in my opinion, going into this week. We've already seen the S&P break its swing, its major swing resistance. We've seen the NASDAQ do it. We're finally testing it here on the Dow Jones. A lot of momentum, a lot of strength going into that resistance level. We really have been pretty sideways over the last little while. And so a break of that resistance would be a pretty good looking signal, in my opinion. We're going to have to fight through it. We do have some momentum. We've got the bulls in charge right now, but we are now, really on our Dow, our NASDAQ, and our S&P either at resistance or getting very, very close. So we're going to have to see a little bit of faith from the buyers, willing to hold those profits, willing to buy a little bit more to push us through it. Seems like a little bit of a domino effect. If we can break through one, maybe can give the other a little bit of courage to break through. So we'll definitely be keeping an eye on these levels of resistance over the course of this week, maybe as early as tomorrow. I mean, we're kind of knocking right on that door in these big indexes. And hello, Lloyd. Good to see you, my friend. Hope you had a great weekend. It went by fast. My brother was in town, and so we just were pretty lazy and hung out, but that makes the weekend go by quick. So beyond this current level of resistance, really you're looking in the 26,800 mark or in that ballpark as our next resistance in my mind. So everywhere has room to run if we can win these fights at resistance. So great to hear that, Lloyd. And hello, Em. Good to see you. Em is my Twitter friend. We see each other on Twitter all the time. So I'm glad to see you over there, Em, for sure. Over and right, did get in on the action today. Continues to be the area that I like the least. That really hasn't changed, but I do think we can at least start to think about getting back into neutrality. Still haven't broke resistance or even challenged it yet. And as we've talked about many times before together, even if we do, we're rewarded with the 200-day moving average. If we win that fight, we're rewarded with 1,600. If we win that fight, we're kind of dealing with the actual resistance just above 1,600. So still have some overhead, still my least favorite of the indexes personally, but I have to give it a little bit of credit working up. I'm interested in seeing the next, when we see some profit taking, right? It's been very easy since we kind of got going on the rut. We've pretty much been able to make higher highs and higher lows almost day to day with the one exception along the way. It showed a lot of strength, relatively speaking, at least. It didn't really care about these moving averages or anything like that. The next wave of selling is the one I'm interested in. I still think you could make a bit of an argument that it isn't a bearish retracement. I don't think I would be comfortable making that, especially with today's price action. Had we moved to the downside and saw a red candle today, breaking intraday lows, getting back below those averages, I probably would have felt a little bit different, but we go with what the price is telling us, right? Right now, I do think going back into a little neutrality in the rut is the way that I will be going about it. It's still by far my least favorite of the indexes. And if these other indexes can take out resistance, it's going to have some catching up to do. So, and hey, Ed, good to see you, my friend, as always. So just a good day for sure. Have to respect the price action. I'm a bigger fan of pretty much all the other indexes. So over in materials, working right back into resistance, could maybe even argue that we closed it here today at 56.33. Some follow through tomorrow is what I will be looking for. Really nice bounce off of that support that we danced on the first half of last week, right back into the top of this trading range, right back into these old highs. You guys don't need me to tell you how many times we've tested and bounced around in this ballpark. If we can, carry this momentum, take out today's high, I think that is going to be a pretty good little signal going into this week in the material sector. Little bit of room to run too. Not a lot of resistance until we get into the mid 57s. I'm going to call it these old lows that we have seen some price action at before, but a little bit of room to run. That would be a very interesting break. I know that we've looked at it several times together, right? We've yet to see it break that resistance. Hasn't done enough to sell me just yet. As you guys know, that follow through is what's important to me. Breaking is the first step, follow through is the next. And so that's what I'm going to be looking for. I'm not going to be terribly surprised if there is some profit taking at resistance, though. If I had bought off of the support bounce on this chart, I'd be thinking about it, if I'm being honest. So, but looks like we're going to challenge resistance there. Over in energy, same story, really. We could either argue that we haven't broke out, or we have, depending on that one-day fake out that we saw 2 Thursdays ago. Now, if we look at this on an hourly time frame, if we kind of think about that old 67 that we watched over and over and over, we finally broke it 2 Thursdays ago. Bad day to do it. Friday we sold off. We're now back above that 67, which I'll definitely call a little bit of a signal. I would like to see us get above this high. Of course, I think that's going to be a much better confirmation point for me, at least. But I do think I'm going to, give it a little bit of the benefit of the doubt, closing right above 67. Again, follow through is important for me here tomorrow within this sector. This is an area that, seasonality wise does perform in April. So a break, I think, coupled with that seasonality could make for an interesting month, or at least start to the month in the energy sector. So a lot of that's probably going to come down to your personal rules. I don't like when we have these fake outs, because that's the age-old question, right? Does this one time matter? It depends on who you ask and when you ask them, probably. If we can clear this out wherever our rules may find us, really not a lot of resistance until that 200-day moving average. That is, of course, that old 69 zone that we've had a lot of history at last year in the early spring. So we'll be keeping an eye on that, but have to like the movement that we saw there. You also have to tip your hat over to the financials. Strong day, up well over 2%, along with industrials, top gainers on the day from a sector perspective, at least. Still very skeptical of those regional banks. Of course, they're still, even with today's price action, which I do think can overall make you feel a little bit better about the financials. You look at isolate those regional banks, and they still look an awful lot like a bearish retracement. So for me, much like last week, I am really kind of looking at it in 2 different areas. Banks shying away from, looking for bearish retracement opportunities. Certainly not there today, in my opinion, in the regional banks. Fine in the other areas from a bullish perspective in the financial sector. Still not my favorite. We still have lots of overhead that we're going to have to deal with. I think just with the way it's behaved, we have to at least monitor that 200-day moving average that's sitting right above us. Of course, 27 is now a level of resistance that we have to work with. So not as much clarity within this sector overall, which is okay. I'd prefer it to be very one-sided. I just think that makes it a little easier for us personally. But if the chart is there, I'm okay with it. I still do look for later in the week potentially some bearish retracement opportunities in the regional banking area. We'll see if we get them or not. But you have, breaking back above that, and those moving average took out that previous swing low, took out all, the short-term moving averages, the 50-day moving average today. I think you have to take, if you were overall bearish in the sector, I think you at least have to take a little bit of that bias off, just based off of how strong it was today, getting us right back into this old trading range that we've dealt with for quite some time now. Lots of overhead, but certainly a lot of momentum here today. That was a very nice day, which again may open up the door for some interesting bearish retracements in some of those weaker areas a little bit later in the week. We'll have to see how that one develops, but I certainly will be watching for some signals in the regional banking in particular. I do think that still looks like a very nice retracement candidate, just not ready to go yet. And hey there, Tavo, good to see you, my friend. Hope you had a great weekend and a pretty nice little Monday. Over in industrials, boy, it broke out and it went crazy. We really ran after breaking, much like the overall market. Gapped up on the open after working right into that 75 resistance here on Friday, gapped and really ran. A lot of strength, and probably, and again, we'll never know the answer to this for sure, but my theory is that at least, well, there isn't a lot of resistance until 77, right? That is certainly a level of resistance that we probably should keep our eyes on. Let's just extend this out just a little bit. We've lots of history here and recent history here as well, but a lot of strength going into the, into that resistance potentially as well. If and when we can take that resistance out, still have some room to run. Probably, we could probably, and I'm kind of wimpy, so I'll probably be kind of eyeballing this swing low down here in the 78.25, 78.35 range is kind of that first level of resistance. Beyond that, really $80 is kind of where I'll be looking. So not there. We have to break that resistance. We're awfully close. Still have some room to run, even though that's not a lot of dollars, right, or cents in this particular case. That can, of course, translate to room to run within individual components in the sector. Do keep an eye on 77 is my thoughts. Just too much price history there not to. That would be a great profit-taking zone in my mind. And hey, Tanner, good to see you, my friend. But a great day, along with financials, two of our biggest gainers here today in a pretty solid day. So, you're winning amongst great challenges here today as well. Over in tech, much like the NASDAQ, went with things working back into that resistance zone just north of $75. Don't think that's a huge area, but we have seen price action there very recently, so probably should respect it. If we can take that out, realistically, 76 seems like the next logical stop before some profit taking may become tempting. So certainly a lot of strength, not a lot of resistance, but some resistance that we're going to have to deal with here as well. But just getting right back in. And so many of those tech stocks, to my eyes, still feel like they have room to run if they would like to. Over in staples, didn't fare quite as well here today as we saw some profits coming out of them into some of the more aggressive areas. If we look at it kind of on the 15-minute time frame, early we saw that more than later. We did get a little bit of a rally late part of the day as folks did appear to start working back into this sector. A pullback would not be bad. I mean, this was a very strong break, and I still think that this is a very solid area from a bullish perspective, but maybe not specifically tomorrow. We are approaching that resistance, still have some room, but we are getting closer and closer to it. A little bit of a pullback could be very, very enticing. I don't want to hold my breath. As you guys know, when these things get moving, it doesn't take much for traders to want to get in on the action. Didn't do anything wrong at all today, at least in my mind, from a technical point of view. A little bit extended, so pullback would not necessarily be a bad thing. But for the most part, to me, it seemed like more than folks turning on staples today, it was just, let's go get some tech. Let's go get some communications. Let's go, get some of these beat up financial stocks. I just really think that, at least the way it felt to me, it was more, let's move money from this more defensive sector into some more aggressive sectors, as opposed to, let's get the heck out of the staples sector here today. Over in utilities, wasn't able to confirm. Of course, Friday, we saw folks jump in, in that at that 20-day moving average. No confirmation here today. Was never really able to even challenge that Friday high. The pullback, if that's what it is, and if that's what we think it is, just wasn't ready, at least not today. I still think that it is a pullback opportunity developing, and I'm glad that it didn't develop here today. There were other areas that maybe were better places, at least for today. I'm still waiting for that confirmation within the sector. Could argue there's a little bit of slowing momentum, and I think that'd be a fair argument. A little consolidation period would not be a bad thing. So many, as you guys know, so many of these individual components are at all-time highs and have been making new all-time highs for quite some time now. So hard to want to say anything bad about it. Just looks like it might need, for me, at least a few more days for this pullback to develop nicely. On the support front, really 57, just a lot of history there. And it would take a break of 57, at least currently, for me to even step back from a bullish posture. honestly, and I don't expect that 57 to go easily. I think that is our line in the sand right now. So I'm not expecting it'll get there, but that doesn't mean it won't. That doesn't mean it won't be there tomorrow, right? So I'll keep an eye on that 57 as support. From an intraday point of view, we are actually seeing a little bit of strengthening, right? Not really anything just yet, but our big drop, our rally back up. We're now dealing with these, shorter term averages, dealing with this previous swing that we set up earlier in the day. A break above that could be our first signal that maybe folks are wanting to move back into this. I don't think that you have to use an aggressive entry technique, generally speaking, into utility stocks. But if I wanted to, going down into an hourly and or a 15-minute time frame to help me get in could be something there. Ideally, we dance around in this area, keep the same 58 and a quarter resistance zone for the next 2 days or so, and then push through. That would be okay. If you're listening to me, utility sector, that's kind of what I want. So over in healthcare, another very back and forth day. And we've talked about it a lot. I know you've talked about it, elsewhere and thought about it on your own. Just some of these things look nice. Some of these things look not so nice, at least depending on your bias. And that really has not changed. I still think that we have to be cautious within this sector right now. I think it's perfectly reasonable, bullish or bearish, as long as your individual chart is there. I just don't think we should expect the sector to drag us along with it. Like Tech's been dragging stocks up along with it, right? That's why we do this. That's why we pay attention to the sectors. Usually those are my expectations, but right now within the healthcare sectors, we've talked about many times, I don't think those are reasonable expectations to have, quite honestly. So still going to be very careful, very open on both sides of the coin. Don't know what it would take to get me comfortable. Probably would be thinking about it if we did take out this 93.50 resistance level. I'd probably start to feel a little more comfortable about leaning a little bit more on the sector than I am right now. Breaking support down here at 89 or thereabouts maybe could get me there, but that's still some movement. We'll have to see. And if we're seeing so much divergence between bullish and bearish stocks, it's going to be hard to get to those and through those numbers. So I expect overall it to continue to behave generally in this manner. Just going to continue to look at the individual components. I think that is a smart way to be playing that sector right now personally. Over discretionary, really nice movement, working all the way back into that 115 range, right? That's not a lot of resistance. We do have a pivot point here. So again, nice upward move, add a little bit of old resistance. Could that open up the door for some profit taking? Absolutely. Is that a super strong level of resistance? I don't believe that it is. I'll respect it because, of course, you guys know I think you should. Beyond that, really don't have a lot of resistance into 118. We talked about this a lot in leading up to that break of 112. This just an area that has room to go. And, as extended as we might look right now, and maybe we need a consolidation, not necessarily tomorrow, but maybe we'll need a pullback or a consolidation. If we can take out this 115, which again, it's there, we'll look at it. I think we should. There's, we take that out, there is room still within this sector. So nothing really has changed for me. I continue to really like the discretionary sector from a technical point of view, and we'll like it even more if it can cleanly take out this old pivot point from back here. Maybe it does take some consolidation or a little bit of a pullback to do so. That would be perfectly fine and healthy if that's the way that it wants to play. But a very solid day over in discretionary here today. Real estate, pretty volatile little day. If we go into a 15-minute time frame, really bounced back, but really on our open, really sold quickly as, we saw some of the money, coming out of defensive into aggressive sectors. But unlike the staples and the utilities, they fought back, but it really wasn't they weren't swinging hard. I think the real estate really was. We really saw it off of those lows on that intraday chart. Volatility is peaking up a little bit within the sector right now, I think you could say, but with what it's been doing, I still think that bulls are basically any excuse to buy is an okay excuse to buy. Certainly they took that advice today. Oh, wow, we really sold off. Let's go get us some real estate stock. Really hard to say anything negative about it right now. I think, maybe some other areas look more appealing, maybe don't feel so extended. Doesn't mean they have to pull back, but maybe some other areas I like a little bit more in the market, but really hard to make much of a bearish case. I mean, for goodness sakes, we're another close above the 9 EMA today, although we did break it on the intraday support. I still think we're probably looking down here at this old resistance around 35.20. Our pivot point here, a pullback into that 20 would be healthy, would be normal in my mind. I'm not going to hold my breath because, well, that's been a bad way to spend your time this year on real estate. Doesn't take much to get traders involved from a buying perspective. No reason in my mind to think that's going to change based off of today's price action, at least. And over communication services, holding that support all week. They really didn't get in on the action on Friday with the rest of the market, but they did make up for it a little bit here today. Nice upward movement, kind of going with the NASDAQ, going with the market as a whole. I still, for the most part, prefer other candidates. I understand the bullish bias that you have to probably give this sector right now, and that's really not been in question. I still like most other areas better. Like tech better. I like an industrial break better. I like a materials break better. So there's lots of things. Of course, I like the discretionary sector better. That kind of goes without saying, I think, at this point. Just other areas. Facebook is still a little bit of a trading range. Netflix still really wobbly. At least it feels to me like they just don't want to get moving one way or the other. Maybe a break of that 48 could get me a little more excited about this sector. We will have to see if and when that happens. Right now, the bullish signals are there, but I don't, for me, not as good as setups across the board, at least, as some of the other areas. Over on Cisco, I will not say a bad thing about Cisco whatsoever by any means, Tavo. I mean, just an absolute juggernaut since its earnings, in particular, since it broke out back here. Really, any technical opportunity to get into Cisco, I think, is fair as long as it's reaching our personal rules. Did gap a little bit through that breakout point or that old resistance here this morning, but it's just so strong. I mean, I guess we've had one or two closes below the 9 EMA since basically the new year. And that is a lot of strength, right? It continues to show a lot of strength. I wouldn't bet against them by any stretch. Things that have been moving this ferociously, maybe as a word to use, are kind of difficult to get in. You don't get those textbook chances. I mean, you had a one-day doji to get a pullback, and you basically had to have faith midweek while the market was kind of battling between support and resistance. You don't get a lot of chances for those clean textbook entries, but basically, Tavo, anytime something has this type of momentum, is making new all-time high after new all-time high, I'm very interested from a bullish perspective. Not necessarily today. There's nothing wrong with waiting for that opportunity. And if it goes by without us, there are other stocks out there, right? There are other fish in the sea. But certainly anything like Cisco, it will always have my interest if either way, if this was this ugly of a downward trend, I would say the same thing, just looking at it from a bearish point of view. We can look at this old resistance zone to be our first level of support. But really right now, I think the fair way to call Cisco, Tavo, is this 52 or approximately 52 doji that we set up last week. That should be, from a technical point of view, from a trending point of view, as long as we stay above 52, we are maintaining that upward trend. And so I think you could argue, depending on your rules and everything, but I think from a pure technical point of view, as long as this is above $52, at least as it currently stands, I would say it's in an upward trend. Pull back tomorrow, run all week long, that really wouldn't change. So good eye. Cisco has been an absolute beauty. And after this break, had this break, on earnings, and it has just been a beauty, no doubt about it. Over in the volatility index, down a little bit here today. Again, traders were a little worried after last Friday's sell-off, and it took them a little time to simmer down. but it does feel like they've kind of done that right now, and it's being reflected in the VIX as we've slowly but surely over the the previous handful of trading days just dripped a little bit lower and lower as traders again, they got a spook, they got scared a little bit. Maybe they should have, right? Sometimes that's good for us. Markets can't just go straight up because it's nice, but certainly they do, at least right now, seem to be a little bit more comfortable with where the market's at. Over in the dollar, just continuing to inch its way closer to that resistance as it just continues to be, as Matt says, one the prettiest, I don't know exactly how he says it, prettiest girl at the dance or at the ball, or I don't know what he says, but I do agree it, relative to other currencies generally does look, seem a bit stronger, both, short term and, longer term. I still think for me, the break is where I'm at. You guys know me by now. That will not change over a boring, lazy weekend. We are getting closer. Obviously, we know the price history in this 97.50 to 97.60 range, a little bit extended to the upside, been very well behaved for the most part, trading within this range. So I will look to that resistance or that area to be a profit-taking zone. Beyond, if that starts moving to the downside, well, it'll just still be in that range, right? So I continue to look for the break to the upside. I think that would be a very nice signal if and when we actually get it. Over in gold, this is going to be a difficult swing trading environment for a little while. We saw some buyers coming back in early in the trading day, working into those short-term moving averages and giving it all back, closing in the red. Still think above 1280, neutral is the way I'm going to be looking at it. Maybe a little skewed to the bearish, but neutral enough to just call it neutral. Below 1280, that could be a pretty ugly sell signal. On the resistance side, really, I think it's 1325. So we've got a wide range between at least what I believe is our support and resistance zone. Right now, with the way it's behaving, not interested in trying to do anything in that middle from a directional perspective. 1280, that should hold. That is a pretty strong level of support. And if that breaks, I think we have to worry lower highs, lower lows, potentially a reverse head and, or head and shoulders pattern. We're not there yet. We may never, get there, but I think 1280 is an important line in the sand for gold right now. And at 1325 is kind of that resistance zone. So hopefully we kind of churn within this area for a little while and ultimately get some time, get some breathing room, and then break one of those two areas, or maybe something new that develops between here and there. But, if I didn't like it last week when it was kind of, inching its way up, or I guess 2 weeks ago on that break, I'm probably not going to change my mind. Very rangy right now. I think you could make a, basically depending on your bias, I like gold, I don't. I think you could easily talk yourself into ignoring the other side. So I'm going to continue to watch, at that 1280, that 1325 range personally. Over on silver, we're right there, right? We know the history that we have at this $15 mark. We don't, we've seen, a lot of tests. We know that's a nice round number. Holding up here today, much like gold, started to run, early, but just not able to sustain that momentum because, again, it's just one part of it maybe, but these technicals, who wants to buy into these technicals, right? Not me, an intraday trader might, but they're going to be keeping an eye on those as well. So not really much to see here. A break below 15, I will certainly call a bearish signal. I could understand, the argument to trade it, and that may very well make that argument myself when we do get a close below that that approximately $15 level of support. I'll assume that's going to be hard to break. It should be. There's a lot of history there, a nice round number. Folks have been buying it at that price point, so I expect it to put up a fight. If it fails, well, I'm going to, certainly be downgrading silver for whatever that's worth. On the buy side, again, right now, probably, I don't even know. Honestly, above 16, 18 or thereabouts, I don't know if we, maybe something can develop and we ultimately break above this 1550, and there's maybe something there if we, kind of back and forth in this for, several weeks. But right now, the bearish side, I could see, I understand the bullish side, from a, hey, if I buy it here and this 15 holds, I have lots more upside than downside if I put my stop loss right below it. That's never been my style. And so I'm not planning on doing that myself, but at least I understand it. Folks are willing to buy it off of that approximately 15. And well, for whatever it's worth, I'm not willing to sell it at that 15. So I certainly can understand the argument from that perspective, at least. Over natural gas, a little more drift after the open, but a nice rally back. Now we have this battle. We now have to worry about this old resistance level, or I'm sorry, this old support level with these falling moving averages. They're going to force a decision in the days to come, I think. Either we can push back through them, start the kind of the whole process all over again, working back into that range, or they're going to keep sliding down and push us lower and lower just one day. But here today, we worked right into that 9 EMA, used that as our intraday high, and really, really sold off a fair amount off of that high on the day. Getting back into that range is what I am hoping for, as you guys know. While I would call this bearish as long as we're below the support. If I had to do something, I would lean short term at least to the bearish side as long as we're below this old support zone. What I really want is a nice clean development and breakout. I got some work to do to get it. So I don't expect to have to really make much of a decision about it this week. Of course, nothing really has changed on the support side down here in that 256, 258 range. And then, of course, right below us at 250, pretty significant price action historically at 250 on natural gas. And lastly, over in crude, really got going here today after kind of sticking its head out on Friday above that 60-20 range. Really got moving here today, working all the way to and technically through the 200-day moving average. Very strong movement here today in crude. Now, this is probably a decision-making time in my head. I expect, I wouldn't be surprised in the slightest if profit taking occurs at this 200-day moving average. It's the first thing that popped into my mind. And while I'm only one person, I'm probably not the only person who thought that. And so is this a fair place to take profits? Absolutely. I wouldn't knock anybody for going that route. On the other side of things, if we can clear through this, if this 200 isn't a big deal for crude right now, really, we still have room to go. Not a lot of real resistance. I mean, there's little things that could, potentially be something, but as far as real historic resistance, really not a lot until $65. So it's one of those kind of decision-making moments where, am I willing to risk some profits at this, resistance level or in the form of the 200-day moving average for that upside, or am I not, right? Have to be willing to make a call. I don't know the answer, unfortunately. Definitely a good first step. Technically we did close above it. A lot of momentum, still very bullish. I wouldn't make a bearish case at that 200. I would just understand the profit-taking case at that 200. If we can break through that, and it may take some time, I really right now expect, kind of 60, I'm not quite there yet, but I'm about ready to say 60 is kind of the new first level of support. I mean, clearly we have history there, so I think we should already respect it, but I'm not quite ready to just call it support yet, but I'm getting closer. There's room. There is room if we can take out this 200-day moving average, which may or may not be easy, right? That's the thing with those long-term averages. A lot of times they do act at least short-term catalysts for, kind of short-term pullback or reversal type of scenarios. Do I think that's the end of the road? No. Right now, I don't think you could make a case for that at all until we break that 58. And I'm not expecting that, at least not this week. Still a little bit on the bullish side, just a little cautious now that we're at resistance. So, or at least what I think could be a resistance catalyst in the form of the 200-day moving average. So, ladies and gentlemen, that's where we find ourselves. Pretty interesting day. It's going to be an interesting week. We've got a lot of things challenging resistance. Crazy how different a week can look, right? Tuesday, Wednesday, Thursday, we're back and forth, never breaking, support, really with the exception of the financial sector and the Russell, which happened kind of 2 weeks ago now. All of a sudden we're at resistance, pushing, a major level in the Dow Jones, something respectable, at least in the S&P 500, a swing high in the NASDAQ, knocking on the door, on the discretionary, on the material sector. So a lot of things are challenging resistance. It feels like it could be one of those domino weeks where one breaks and pushes the next one through, which pushes the next one through. We'll have to see if that's the way it goes. I do think we want to be mindful of these resistance zones. It's not easy to break resistance. Just as we saw last week, it's not easy to break support. But overall, very good start to the week in the market. I think you probably keep the bullish bias that you probably had going into the week. So that is where we find ourselves, ladies and gentlemen. But as always, it is certainly my pleasure, and I do appreciate everybody's time. It's always great to see you guys, and a lot more fun to do this with you guys than on my own. So thank you so much for joining me. And if, of course, you're new around here, be sure to subscribe to the channel and hit that notification bell. Join us over at Tackle Trading on Twitter. You, of course, can find me and am over on Twitter. I'm at Frank Martin 23. If you're ever looking for me, don't be afraid to pop in and say hello. It's an easy way to chat. And a fun way. And it's a nice way for me because I tend to be really wordy when I try to answer questions in type format or word format for that matter. So having a limited characters really makes it interesting. So if you enjoy the market recap, it is always helpful and appreciated if you do give it a thumbs up. So thank you ahead of time for that. Hey, a pleasure, guys. So much fun doing this with you guys. I'll let you get out of here. If you are new to Tackle Trading, I will be doing our onboarding webinar tonight at 8:30 p.m. Eastern, just kind of walking our new team members through the site, kind of getting them a little bit of a daily routine going. So imagine most of you guys I won't see over there, but if you are new, feel free to join me over there as well. With that, ladies and gentlemen, get the heck out of here. Go enjoy your Monday afternoon/evening. I will see you same time and channel here tomorrow afternoon. Thank you, everyone.